Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a great day. We're taking a look here at XRP, seeing what's going on. We've got a lot of traders in our community here trading this coin with great success. We're going to double check if it's important levels of retracement, but also, is it worth taking along at this level? Short answer is yes, because it's got so much momentum. It's hard to bet against it. But the truth is, we want to look at some macro FIB levels and just kind of see where we're at here in the overall sentiment. So we'll take a look at that and much more, of course. So if you're new to the channel, thanks again for being an awesome part of my life. Obviously, to those who've been watching me for a long time, you are deeply appreciated. It's been a fantastic experience for the last 3.5 years on the channel, of course. Been trading for over 20, but I can tell you crypto has been the most dynamic and unique, especially with a lot of traders here. So if we do take a look here, of course, just really quick to throw it out there. The key FIB levels here, we got this 0.618 golden pocket in like the 133 to 138 range. That seems pretty sensible for an area of resistance if the price goes any further up. We also can see here we got a weekly, some weekly closures in the 122 to 130 range. Okay, so I'm just going to go ahead and draw out a couple of lines here and see where we're at, and we'll take a look at that later. Let's also double check the daily time frame too and see roughly what that looks like. Apologize, the chart's going all crazy here. All right, yeah, so we can kind of see, yep, there's 121, and then of course, 129 too is the other area, okay? So we'll just kind of pay attention to those levels and go from there. So what we'll do first is we're gonna pull up some liquidation charts and kind of see where that is at and move forward from there. If I'm not mistaken, let's see here. I may need to open a new one. Here we go. So yeah, when we look at liquidation, folks, we are looking for specifically, areas of concentration where people are hedged the most. In other words, where are people basically heaviest, if you will. Okay. Now, again, a lot of times when prices run like this, the liquidation levels are going to be kind of all over the place. I mean, as you can see here, it's really hard to interpret where the liquidation levels are, even from a broader perspective. So we'll look at the liquidation delta as well and kind of see what that tells us. And let's jump right into that first, because I like to kind of see where we're at. We do have a lot of longs that have since closed or secured profits here recently. That's when the price pulled back down. They likely got stopped out based on the simple fact that we had a pretty aggressive wick down. But we can see here roughly at maybe about $2 billion in delta for liquidation longs. That tells us there's $2 billion more in liquidation for longs versus shorts. Not to say there's no shorts at all, but that does tell us that people are pretty heavy on long positions, which is good. You want to go in the direction of the trend, right? So when you're trading, you see that you don't necessarily want to short into it. It doesn't make a ton of sense. In fact, let's look at the last 12 hours. This is going to give us probably the best perspective considering how fast the coin is running and where people are hedged the most. So we do have heavy concentrations of liquidation on the downside at the 105 to 104 mark. There's a couple of big chunks there. And then of course, $1 to 102. So loosely, 1 to 105 is those areas, but 105 and 104 are the most more pressing ones there. Additionally, to the upside, we can see very similar circumstance here as well. There's a big chunk at 119 and 120. So 119 and 120 are numbers to kind of remember there. Those are just above the price action. All right, so now that we've established a baseline that more people are taking longs than shorts, I know it's kind of seems pretty obvious, but it's important to recognize that. We can kind of evaluate the charts a little bit more effectively. So when we look at the daily time frame, we're going to be above all moving averages for quite some time. Even if the price rakes down, we'll still be considered bullish according to those indicators. So it's important to be above them, of course, but you don't want to blindly be bullish too either, just because when that occurs, a lot of times there can be some obvious shifts in momentum. And, moving averages are helpful to know you're on the right side of tracks. I guess that's a simple way to understand it. But truthfully here, there's no reason to consider shorting. If you look at this volume, you don't short into that kind of volume, especially when it basically over amplifies those previous candles. So everything here on the daily time frame is extremely bullish. There's nothing here letting us know there's any hidden divergences or anything stupid like that. We won't see that for a while. 4-hour time frame, we can recognize as well. If we look at TD sequential, we are 1, 2, 3, 4, 5, 6, about 24 hours of overextended into this continuation. And if we look at the daily time frame, just to clarify too, we are also about 3 days overextended. So the cold hard truth about overextension is it means very little in crypto, especially when there's monumental trends like this. But it's important to recognize that generally speaking, when you see 2, maybe 3 nines in a row, you're more likely to see a retracement. So we got our 1 9 here, period of consolidation comes up to a second 9. Okay, so we're already about, 48 hours of continuation. Now we're getting a little bit greedy here with 4 more actually rather 6 more bars of continuation. So we are about 24 hours overextended here at this point. So likelihood of retracement is high because of that, but again, everything else is telling us it's going to go up. There's no reason to short into it either. So even though it seems like a prime opportunity, I would be very cautious and careful shorting this coin. So generally speaking, the 4-hour time frame, everything is fully bullish here. There's no reason to consider trading against that. We'll take a look at the hourly. We can see that we also hit an overextended state here, pushing a little bit further up, which means very little. Because if we look at the Ichimoku cloud, this is confirming there's no reason to consider a short position and that you should leave your long position open. Okay, we just got to recognize too, and again, I drew these lines out for a reason. These 2 red lines, 121 to 130, this is an area of resistance. Okay, so that's the easy way to understand it because those are previous candlestick closures on the daily and the monthly, or sorry, weekly and the daily from quite a while ago. I know it seems kind of crazy. Why is data from that long ago relevant? We got to understand people that got in heavy at that 115 to 130 range, they're selling now because they're finally breaking even. That's why we're seeing a lot of resistance. So the important thing here is that, to feel confident and take another long, I would say, I would wait for the price action to consolidate and kind of hang out in this 122 to 130 range first. And then at that point, consider a long, just based on the simple fact that a lot of times you can see these bullish rectangle patterns forming. Bitcoin did quite a few of them recently before it broke out, but it would look something like this here, where the price action just kind of works itself into a channel, and then it inevitably breaks upwards once it's established a base of volume. Because right now, things are kind of flying in and out really quickly, so we're seeing a lot of selling pressure reaching this zone. So you just got to kind of understand, taking a long at this point is, you're still going to find more success than taking a short, but it's still a higher risk. The higher the price goes into resistance, the more risky it is. But if it spends some time there, consolidates, breaks free from that range, that's when you see the golden ticket. So again, it's never an exact science. What I'm talking to you about right now too is more of a conservative trading style that doesn't necessarily give you tons of results in this kind of trend. But the overall sentiment is that, if you are using good risk tolerance at all times, you're going to find consistent growth no matter what. So again, instead of peaks and valleys, I would recommend low leverage, low position size, and just making sure that you are trading responsibly, if you will. Okay. Again, everyone has different risk tolerance. It's up to you and what you want to do with that. But best practice to me is just being a little bit more patient and waiting for the right opportunities. Albeit majority of those opportunities never come to pass because you can be too patient sometimes, which I am absolutely guilty of that. So that's all good though, folks. Again, I've been trading for 20 years is my full-time job, so more so part-time job, but if you get the idea. And the whole concept is that when I trade, I'm more so looking to survive, not necessarily, retire in a couple of years. Okay. Granted, it would be nice, but I don't want to risk everything I've worked hard for to get there. Okay. Slow, steady growth. That's the important thing. Okay. Anyways, that's all I got here for you. I'm going to post our playout chart on our Twitter, Telegram, and Discord. It looks a little something like this. Make sure you take advantage of the link down below for Bitunix if you can consider a no KYC or VPN exchange. They got an awesome bonus this month. We got a 60K prize pool spread amongst the top 20 traders. This is really cool stuff. Anyways, check that out at your own in your own time. If you have questions, feel free to reach out. CryptoCash.tech is where you can register for our Trading Academy community and signals group. I will post our playout chart here shortly. I appreciate your time. Look forward to seeing you next one. Have a good day. Bye-bye.